So my clients ask me all the time, what are the best ways to pay off their mortgage faster? So today we're going to talk about my 3 favorite strategies to help you pay off your loan quicker. So the very first strategy is very simple, and a lot of people talk about this, and a lot of people already do this. It would involve you making one extra payment onto your mortgage per year. So when you make additional payments on your mortgage, that entire payment goes toward principal. Nothing goes toward interest. So what you're doing is you're paying your loan off quicker than the normal scheduled payment, and you're cutting down on the amount of interest that you have to pay over the life of the loan, and it shortens the amount of time it takes to pay off that loan. So on a 30-year fixed rate loan, this will save you about 6 years by just making one additional payment of whatever your full monthly mortgage payment is. So that's the first strategy that's very simple that a lot of people can take advantage of. So strategy number 2 is also pretty simple, but it's a little bit different than the last one. And this one involves, instead of making your one full payment per month onto your mortgage like you have to, right? It's the minimum. Instead, you break that up into 2 half payments. This does 2 things. The first thing, instead of accruing interest over the full month, and when you make that first payment, you're cutting down the accrued interest by 15 days or so, which over the lifetime of the loan actually cuts down on the amount of interest you pay by a considerable amount. So for example, you would make your first half payment on the 15th of the month, and then you would make the second half payment on the 1st of the month, the due date of the next month. That's how that would work. You're cutting down the amount of interest. The second part of this strategy is that there's 52 weeks in a year, and if you do it bi-weekly instead of once a month, you actually end up making 13 full payments in that year, not just 12, which is the normally scheduled payment amount. So you actually do get in an extra payment when you do it bi-weekly as well. So the third strategy is also very simple, and this one is always going to be looking at where interest rates are and do you have an opportunity to refinance your loan. So for example, if you bought a home in 2024 and you have around a 7% interest rate, and then rates come down at some point in the future, and that new rate that you could possibly get on a 30-year mortgage is 5%, you're probably going to want to take advantage of that, because what you're doing is you're resetting your mortgage to a lower interest. But the second thing is you're doing is more of your payment is actually going to be going toward principal than it was in the 5% fixed rate loan than a 7% fixed rate loan. And then I tell all my clients, if you're used to making that higher payment that you were used to with the 7%, keep making that payment, because all that additional money now that you're saving on the lower interest mortgage goes all toward principal, and it's going to be paying down your loan even faster. So this is obviously an opportunity that most people look for and rely on their mortgage person to alert them, hey, interest rates have gone down. It's time to do a rate and term refinance, drop your interest rate, drop your payment, but continue to make that full payment that you're used to, and you'll pay off your mortgage so much faster. All right, I got one more, and this is a bonus strategy that's a little bit more complex than the other ones that I wanted to share with you guys. So this one, a strategy to help pay off your mortgage faster, involves not getting a traditional fixed mortgage, but actually getting a home equity line of credit in place of a fixed mortgage. Now, a home equity line of credit is a line of credit that's attached to your house, and when it's in first position, this is going to be the only loan that you have on your house, okay? So it's just going to be a line of credit. Now, lines of credit, you can charge them up, you can pay them down, and it's just a revolving payment based on how much interest you owe in that particular month. So there's a strategy out there where instead of getting a fixed loan, you get a line of credit on your house, and you put all of your income on paying down that line of credit. All your income, right? If you're married and you have kids and maybe two incomes and you're making $10,000 a month, you would put all your $10,000 a month onto your line of credit, And then throughout the month, as you're buying groceries, paying for other debt, and you're paying for all these life expenses, you just take a little extra money out of that line of credit to pay for everything. So what you're doing is you're putting these big chunks down on your line of credit, paying down that principal really, really quick, but then you're also using your line of credit to pay for your living expenses. And why this strategy works so well is because those big chunks that are paying down that line of credit go so much quicker when you utilize it in that way than if you would have just made a fixed payment every single month, because that line of credit is always there and available to you. You can always charge it up if you need some cash, right? So you can almost use it like a savings account that's attached to your house that does require interest. But if you put all your money toward it, all your income, and then take money out as needed, you're actually paying it off way faster. So that's kind of a bonus strategy. It's a little bit more complex, and it involves a line of credit versus a fixed rate loan, but it's one way that a lot of people have paid off their mortgages so much faster. Thank you guys so much for watching this video. And if you have any more questions about strategies to either get loans, pay them off quicker, buy real estate, would love for you to reach out, like and subscribe, and I'll see you again soon.